So hello everyone, and I do hope everyone is doing well. The reason I'm making this screencast-o-matic video is I want to show you how some other textbooks in finance will use a statement of retained earnings to reconcile what's owed to the shareholders. And it's actually pretty straightforward. The first thing I want you to see is here's the income statement that we talked about, and this column right here called net profit after taxes for 2019 of $231,000. Notice this comes, and it's after taxes. Notice this comes after the interest expenses paid to the bondholders, right? And that gives us the net profit before taxes, and then we pay our taxes, and we have what's called net profit after taxes. Okay, so that's 231. Now you'll notice $10,000 was paid to the preferred stockholders, right? Which leaves $221,000 available for the common stockholders. Now I want you to notice what happens in this column right here. I'm going to go to the statement of retained earnings now. So let me just click over there, and it takes a second. Okay, so here is the statement of retained earnings, and as you can see, it's somewhat simple, and basically what it's got is the balance of the retained earnings before the year started. It's a running total or forever. So you'll notice the retained earnings balance starts at $1,012,000. Now again, here are the net profit after taxes from the income statement, right? At $231,000. Now we got to start subtracting some stuff off. Okay, so here's the $10,000 that's paid to the preferred stockholders already, correct? And here's the $98,000 in dividends paid to the common stockholders, and both of these will appear on what I just showed you, the income statement there. So what we're going to subtract off is this total of $108,000. Okay, so you'll notice now that if I take the previous balance, add the net profit after taxes from the income statement, subtract off the $108,000 in dividends I paid, that leaves now the retained earning balance for the year has now gone up to $1,135,000. So no matter what the company makes in a net profit after taxes, technically that belongs to the shareholders. So you'll notice only this amount of $108,000 was paid to the shareholders. So now we basically have a total that still belongs to the shareholders of $1,135,000, when previously it was $1,012,000. So you can see how they apply this on a retained earnings statement. Okay. All right. So I hope that's clear. So most books will use this retained earnings statement, and you can see kind of what it says here. Reconciles the net income earned during a given year and any cash dividend paid with the change in retained earnings between the start and end of that year. Okay. Well, thank you, and I hope everybody sees that and have